What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is November 11th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got a massive update to cover here on the channel as Bitcoin has surged from $68,000 to over $81,000 since our last update on Monday. And beyond that as well, altcoins are finally ticking off all the major boxes that signal the cue for an altcoin cycle. And while there may be some kind of temporary pullback that I want you guys to be aware about in the short term, I want you to also be prepared for the broader move. We've got a lot to unpack here, not to mention we're going to be talking about the stock market as well and some exciting things going on there. If you enjoyed the video, consider dropping a like, grab a cup of coffee, and let's go ahead and kick things off. So I want to start here by talking about Bitcoin here, guys, because over the last week, we've had a monstrous move in price. This has been our biggest weekly move we have seen in a very long period of time. We had some solid double-digit weekly candles back here during this kind of chop that we had, but this has really been the biggest price expansion in a week that we've seen since back here in February of 2024. So this is already starting to showcase here, as we've been talking about for the past really month and a half to 2 months, how we finally started to get out of this chop, this slight decline of lower highs and lower lows, and have been able to start trending with higher lows and started to trend with higher highs. And that was the first initial cue here, as we started to make those moving averages like the 21-day support multiple times, and bulls were able to provide that ample buy-side support. That was that initial cue for price to be able to continue going higher. Now, as many of you know, we're not so much focused on trading Bitcoin here, but we do want to have an understanding of where we expect Bitcoin to top. And as many of you know, we've talked about the idea that Bitcoin is likely going to come up here to the $90,000 range. That's our target. It takes into account the 2 prior highs from the last bull market, setting an alignment there. And I think that's going to be a very big psychological barrier. A lot of people are going to be expecting $100,000, and they're going to be trading on leverage. They're going to be chasing it. But at the end of the day, we need to be a little bit more cynical. We need to understand diminishing returns. And I'm going to build this up as we go throughout the video through some other charts and points beyond just analyzing Bitcoin's price. Nonetheless, in the short term, I just wanted to let you guys know, it could very well be that we're coming in for a correction in the next day or two down to the 21-day. I think this will play out well into December. I don't think we're going to hit that 90K target here in the month of November. I think we could very well see some cool down periods like we have here. And even considering into the weekend here, it's going to take probably until mid-December before we hit that price tag. The next thing that I want to talk about, though, is obviously altcoins, because while in the near term, we may be in for a little cool down in Bitcoin over the next couple of days, maybe it's just a kind of slow week or price stalls in Bitcoin and altcoins. What we really have to ask now is, are we in a position where we could expect some kind of altcoin cycle, some broader expansion over the next few months, where there will be plays that make multiples on the current valuations? And I think that the likelihood of that is very probable at this point. All the things that we've talked about here, whether it be here on the channel, whether it be in the Dash report that we write here on the Data Dash channel, the big thing that we've emphasized is seeing a few key things happen with some of our key indices and metrics. The first one here being a breakthrough of the 200-day, or the 200-day pocket that was acting as resistance since as far back here as June of 2024. So for multiple months, this was weighing down any attempt at trying to recover past prior levels of resistance for altcoins. So altcoins really couldn't catch a break. They were not able to really break that level, but now here, after the election, we've essentially seen that there's enough momentum here, enough of an increase in the volume profile for us to start getting really interested here. Not to mention, we still, if we were to just come up to the prior relative highs from back in March or the all-time highs on the others index, this would mean that we still have anywhere from a 43% to 66% expansion in valuation. So we've got a lot of room to run up here, and I think that that's a very probable range to get to if sentiment maintains positive and we're able to start making things like the 21-day support again, rather than something that we were inconsistently holding on before. Now, that's one metric that we care about, but the other here is others dominance. We want to see that others dominance is broadly expanding, because while it's great Bitcoin's moving up, if altcoins aren't keeping up here, we're really not too interested in it, right? Because at the end of the day, we're not really that excited about trading Bitcoin and chasing Bitcoin after it's already made the expansion that it has, considering diminishing returns. We're in the later stages. What we care about here is whether or not altcoins are going to be able to have a realistic probability of expanding here to 13.5% dominance, or somewhere in that ballpark, a little bit lower, a little bit higher, because that's going to give us the kind of momentum and price acceleration and value increase that could allow for some altcoins to do some really big moves. But again, keep in mind here, we are still roughly in the capitulation range from June and August and where we were back here in October. Nonetheless, we are back in the long-term channel. We had a short-term deviation, as we had warned about, that could play out, and we had an engulfing candle this past week. We are above the 21-day moving average. While it's nothing absolutely ecstatic, these are all positive signs we've been looking for here to be able to potentially start building some altcoin positions. So this is really good stuff. And the last kind of cherry on top is not just that others' dominance is expanding, and that could just be because stablecoins are losing some dominance, maybe ETH is losing some dominance, but that's not the case. ETH is expanding dominance. Other coins are expanding dominance, and Bitcoin dominance, therefore, is starting to decline. We had a pretty substantial drop here so far for the week. We're trying to see, Bitcoin dominance is trying to reclaim the 21-day, but if that acts as resistance, as many of you know, if you've traded through other cycles before, we just take it to the monthly, when you get those big Bitcoin dominance drops, that's usually your cue here for an altcoin cycle. It was like that back here. For example, in January 2021, it was like that here in March of 2017, and also in January 2018 and December 2017, where things really started to get heated up towards when Bitcoin was making new highs in price. It tends to be that Bitcoin wins out first, and it has a trickle-down effect that's net positive for altcoins. So this is, again, a pretty heightened range here for Bitcoin dominance. I wouldn't be surprised if we get something like that. And what's interesting to consider is that back between, say back in Q1 where things were getting really crazy, Bitcoin dominance really didn't decline too sharply. So we haven't really seen that big flush out in Bitcoin dominance that we usually see. Could that play out here? I think there's a good chance that could happen. Again, probably nowhere near as dramatic as the two prior times in the past. But nonetheless, we could see something maybe into the 200-week pocket. And that alone, giving up a couple percentage points here for Bitcoin, which is a multi-trillion-dollar asset, and a lot of that value rotating into altcoins could mean that we could easily get back up to the range we were at back in Q1 of this year. Nonetheless, here I want you guys to keep in mind about the broader ability for Bitcoin to expand. This is something that I think a lot of people are going to miss on. We have to understand here how big of a market crypto has become, and also the general concept historically of diminishing returns. I want to focus on a couple things here. Top to bottom analysis, right? We are seeing weaker and weaker bull markets. You're seeing weaker bear market corrections. Now, of course, we don't have a ton of data points here to work with, not to mention we are missing some bull markets here as we're looking at the total metric. But this is all crypto market valuation. I think it's important to look at that picture because what you generally will find here, give or take a margin of error, you're looking at pretty much a 10th reduction. So 1/10 of the price multiple per the last two bull markets for one another. So 35,893% coming here to 3,200%. And what I think is going to be the target this time around, if we are using that as a sort of goalpost here, is that I think from bottom to top, we're going to come up back to the prior highs back in November 2021. And I'm not saying we can't go a little bit above that. I'm not saying we're going to absolutely hit that target. We might be a little bit lower. But I think that this is something that is a realistic ask for where we could go, which means we're in the later phases here. But as it was back here in Q1, where there was a ton of money made in altcoins and meme coins, we made some great trades back then, right? We want to be able to trade altcoins when it's favorable for us. And it tends to be in these kind of last minute periods of time in the market, like between October to November 2021, or here from March to May. There was some crazy awesome moves going on during that period of time. So this is, again, an important dynamic to understand here that, again, while it's not that exciting from a percentage return, from here on out, we're talking about another additional $300 or $400 billion of market cap here. And if a lot of that is going to maybe initially go to Bitcoin and then rotate into altcoins, you could get that same expansion we had back to the prior highs in Q1. And we're finally starting to see price action that excites me, guys. You all know if you watch the channel, I'm not really big about buying absolute bottoms or trying to catch falling knives, right? If you have proper risk mitigation, you set up a tight stop loss and, you're buying after a nice flush down and prices started to neutralize, and maybe it's getting above the 21-day, maybe. But for me, I generally like to look for just broad price expansion in the market that showcases that the momentum is returned, because in that case, there's likely more room to go for the next couple of weeks to the next month or so. We can see over the last 7 days, there have been many plays from meme coins, also as well to DeFi plays and layer one plays that have really started to take off and do solid double-digit returns. Now, not all altcoins are in this camp, but if you're filtering down to market leaders, if you're filtering down to the narratives we've been discussing, you'll see a lot of those players are the ones that are leading. Like in the last 24 hours, Stacks is one of those plays. We've talked about Tau as well, Render, all up double digits here. So it's good to see that there is some price momentum here. Nonetheless, if you take a look across the board in the altcoin market, this is just where I'm going to play a little bit of devil's advocate here. Just let you guys know, at the end of the day, you've got to really lean into price action. The big thing here that I'm seeing across a lot of these plays is still, for example, plays like Fetch, which is one of the really strong AI plays or deep in plays in the market, still not catching a bid against the 21-day moving average. Against its Bitcoin pairing. Now in dollar terms, it's obviously up a little bit here alongside Bitcoin, but for me to get really excited and really see this have the big full move beyond the 200-day pocket, which would already be a great percentage return from there, but really going up back to where it was in March, right? And going beyond that possibly, we've got to clear through some of those moving averages. So don't feel this immense FOMO here. If we really are going to get that cycle play out, for altcoins, then we've got time here. But again, there are some plays here that are starting to show up a little bit. We've got Render above the 21-day moving average. Love to see it. We're going to have to still get past those long-term moving averages for things to get exciting, but still overall, so long as we maintain above that 21-day, I feel that it's a decent risk setup here. The other one is Stacks. Stacks had a major move here. Over the last 24 hours, it's faded some of it as it hit some of the long-term moving averages. Still, getting above the 21-day, this is where we can start to see things get interesting. And those long-term moving averages are not far away. You get 2 or 3 good candles here, you get above that. When we get above the 200-day moving average, as we've talked about, guys, that's when things usually get interesting here. We saw it back here. We saw it over here. It's not rocket science. We've just got to maintain patience and lean into those moving averages and know when it's time to take that excess risk where liquidity, new participants in the market, and sentiment broadly pick up. Tau, again, as we pointed out on CoinMarketCap, getting above the 21-day moving average first time since basically turning it back here in September. We had great expansion, but faded a lot of those gains. Not too far off from this range back here. So you're still getting it at a decent range. This could easily do a 100% move against Bitcoin, right? So you're talking about those plays that can give you really nice percentage returns irrespective of what Bitcoin's doing, but beyond that as well are those easy kind of 2 or 3x plays in the event of a broader altcoin cycle. I know a lot of people have asked me about ETH as well. Finally, really nice to see ETH getting above the 21-day moving average. Really nice pop here over the last couple of days. I'm looking for it to nest on that 21-day or maybe not even come down and touch the 21-day. I want to see that bulls have finally taken charge here. And if that's the case, with a kind of close above the 100-day moving average, that's where things could get really interesting. That's where we could come up and test these kind of consistent ranges where price either faced support or resistance, like 0.051 the ratio. And that for ETH is still like, if you were to just take it from like say around current prices, is a nice 35% move. So a bit of a safer play here. I don't see there being massive multiples in Ethereum, but again, maybe you trade with a bit of leverage, like 2x or something, nothing too crazy. I think crypto already gives you enough opportunities. We don't need to do it too much, or at least use any excessive levels. In Solana, people are obviously getting juiced up about Solana. Again, though, generally still in the range of chop here against Bitcoin. No serious price acceleration in regards to BTC terms. So I think, again, what you need to keep in mind here when you're picking out altcoins is you need to first prioritize price action at the end of the day. That's definitely one element here. I'm just going to say, irrespective, guys, you've got to focus on price action, getting above that 21-day, having plays that are top performers, because those top performers could very well continue out in the cycle. But on the other end of the stick as well, there is another important dynamic here, which is that you need to have those plays that have the markets a scale opportunity alongside really strong fundamentals. Plays that are either layer one protocols or key plays in the meme coin space and Bitcoin infrastructure and deep inner AI, these real world assets, all the kind of key narratives that we've talked about here. You need to have those plays on your radar and see which ones are starting to pop up, but also, again, have that ability to be able to make massive price expansion. Solana is going to struggle. Solana, if we just take a look at a market cap perspective, is sitting right now at $98 billion. Not to say that it can't move higher, not to say that it couldn't go on to, having a $100 billion market cap or more, but the price multiple potential is really not there to make it exciting, right? The time to do that was to be a contrarian and buy Solana back in the day when most people didn't want to buy it. So the big thing I want to emphasize is that you should definitely keep projects like Zero on your radar. This is one of our partners here in the channel. We've been working with Zero for a long period of time. We've been following the project since as far back as late 2022. And I think at the end of the day, Zero is definitely one you need to keep on your radar when it comes to the layer one or infrastructure plays in the crypto space, especially as it's the leader in the narrative of privacy, in my opinion, especially when it comes to EVM compatibility and CosmWasm support in the sense of the Cosmos SDK and environment. These are two prominent L1 ecosystems to be compatible with, and Zero has the functionality for that, but they have the privacy element with it, as well as a newly defined supply and inflation model for the token that really puts some predictability into the monetary system for Zero that wasn't there before back throughout the past. And beyond that as well, I highly recommend, if you guys haven't already, they put out a really great blog post back on the later part of October talking about using ZK technology when it comes to the real world asset use case and how Zero is well positioned utilizing privacy technology to be able to actually build a layer one chain that can, in a sense, with compliance, with functionality, provide the experience where you'll be able to offer real world asset applications or tokenized assets on chain on Zero. There are a big range of things, some of them we've talked a lot about, such as regulatory compliance, things like GDPR, that can be the absolute difference, whether people like it or not, between a corporate company in Europe actually adopting these technologies, let alone in the US, as well with being compliant to European laws if they want to service users abroad. There's a whole range of other things, such as user privacy and data protection, that are very critical for these actual applications to reach any semblance of actual adoption long term. And Zero has the infrastructure that other chains simply don't have in order to meet those privacy needs. So definitely keep it on your radar. Keep diving into it, guys. I'm not here to tell you guys you need to buy the token. I'm just letting you know to keep it on your radar, watch its price, see how it does, and above all, keep an eye on the fundamentals in the ecosystem development around Zero. But last but not least, we got to talk about what's going on in equities, guys. There is something really interesting going on here. And that is something I know I have, I know it's a weird analogy. I've beaten it like a dead horse at this point. I know you guys are probably a bit tired of me talking about it, but today is going to be a little bit different because we have officially, it's maybe a little bit negotiable, but if you look at the actual logarithmic setup here over the last 95 years, since the roaring 20s, since the dot-com bubble and where we stand here today, we have not only just printed the big even of 6,000 points on the S&P 500, huge milestone already, but it is negotiable, or not negotiable, I guess it is debatable, if you will, that we are finally started to surpass this line of resistance made up of those two prior highs between the dot-com bubble and the roaring 20s. We are breaking a resistance line, or we are on the cusp of breaking a line of resistance that has been holding down price for over 95 years. It is made up of the two most euphoric periods in equities that we have on record throughout that window of time. And that is very telling here about where equities are when it comes to pricing in the long run. We're probably definitely overbought and kind of in the peak phase of euphoria. But as many of you know, the market can remain irrational longer than we can remain solvent. And the main point I want to make here is that if we really, over the next week, I'm already kind of on edge here. I'm seeing some of the moves that we're going to be talking about here in the small caps. I think we're set up for another couple months of upside at a minimum in the small cap stocks, which we're really heavily focused on. Our emerging market leader plays in equities that could do what crypto's done over the last couple of years. I don't think crypto is going to see those kind of percentage returns. But beyond that as well, for a broader stock market rally over the next couple of months, going into Q1 of 2025. I don't want to get euphoric. I don't want you guys to go all in or anything like that. I'm just letting you know here that we may see a broader extension here, a sort of deviation, if you will, where a lot of people will essentially get trapped and essentially price will kind of rally up here and eventually break down to the channel, come down into our long-term accumulation channel between the 100-month and the 200-week pocket. I think that is likely what's going to play out here because, if we take a look at the yield curve, we are seeing those initial signs of uninversion. The recession will come down the pipeline, but I think the equity markets are really going to kind of buoy or weather the storm, because the markets are pricing in the cost saving reductions around AI, as well as the trickle down effect that that's going to have, not just obviously for companies like NVIDIA and all these GPU manufacturers and technology and software companies that are going to save capital, and increase revenue for the business, but beyond that as well, the increased cost savings for a whole range of companies. So that's a very important dynamic to understand here, that with a Trump presidency in the picture, as well as these factors that we discussed, this could allow for a short-term deviation where a lot of people who are trying to short at this range or take profits will get caught on the sidelines here on a further move to the upside. That's going to lead a lot of people to FOMO back into the market. But during that period of time, as we're starting to go up into that range, we're going to be taking profits. We're going to be stepping back, de-risking. But when I take a look here at the Russell 2000, and I take a look at the bi-weekly chart here, just kind of zoom out, this looks like we've got the initial spring up here to go up to 3,000 points. And this Russell 2000 is an index of the 2,000 smallest companies in the broader Russell index that gets tracked by the firm. And essentially, this is going to give us a broad measurement of a lot of new emerging sectors that are going to be doing well over the next couple of years, that are going to eventually step up into the larger indices like the NASDAQ, step into the S&P 500, the Dow Jones, the next titans of industry that really could, by the late 2020s or the early 2030s, become the new FANG stocks, the new technology companies that really do well and continue to outpace the market. That's what we're really seeking out here. And if you lean into price action, if you're able to categorize these topics and understand their fundamentals and the exciting potential behind them, you can really start to find plays that are outpacing crypto. So there's a big reason why I'm bringing this up here today, guys, because there have been a lot of plays. We sent out a list, for example, of stock plays that we're keeping on our radar. And from last week, I mean, this is not something that's been going on. Most of the gains from the last year have been in the large caps. But in the past week, a lot of the small mid caps that we kept on our radar, many of them did 10, 20, 40% returns in a week from when we talked about them. And that's mainly due to this pop-up we saw over the past week from November 5th on the election day. Going to November 6th, we had a major move here, 5.8%. And since then, no fade back, no pullback in price. I just want to zoom in here so you guys can see it here. I know that the chart's a little bit messed up there. Take a look at that huge pop-up here. No fade at all, looking like it's ready for further expansion. So the broader trend is there. A lot of the sectors we're watching are trending well. I'll give you one great example. So this is SoundHound AI. This is, again, a momentum trade here, right? SoundHound, at the end of the day, they have some really interesting technology around audio-based AI. But again, going beyond trying to talk about the fundamentals, right? You can obviously look into the company if you want. The main thing I wanted to emphasize is that SoundHound here, we talked about watching it around the 21-day, and as it reclaimed it here, look at that momentum we had here. In one single day, 22%. That outpaced the vast majority of altcoins, right? So there are tons of equities here. And I would say, especially in the small cap sector of equities, that are outpacing a lot of the performance of various coins and tokens in the altcoin space. It's a big point I want to drive home, that you're not going to have, in my opinion, altcoins really being the home for risk taking for the next couple of years. If you're really looking for kind of longer term trend plays, not even that, but even short term trend plays, a lot of the opportunity is going to be in equities. So this is one of those momentum AI plays. Beautiful build up on the 200-day, always setting in generally higher lows here and looking like it's ready to spring up higher. Now, if you guys want to know what kind of price targets we have for SoundHound, what other plays we're watching here, you guys can always consider checking out the Dash report here. It's our newsletter here on the channel. I put out a 20-page plus report. You guys can get 20% off if you sign up on an annualized basis, but I put out a 20-page plus report. We put out a couple stock trades, both in the newsletter, but outside of this, while we try to put up some weekly setups or different plays that we're watching in the market, from crypto to equities. We've also got exclusive market updates, along with that as well, our mid-month webinar where you guys can ask me questions and answers that will probably come up here in the next week or so. But nonetheless here, there are a lot of really interesting things going on in the market. And if you guys want to consider supporting the channel, it's a great way to do that. You can always start off, of course, on the monthly. Give it a try, see if you like it, and of course, get to discuss with a lot of different participants in the market. But that's it for today's video, everyone. I hope you guys have a fantastic day wherever you are. If you like this video, consider dropping a like. It's a great way to support the channel. Stay focused, guys. This is the time to be on the money right now when it comes to markets. Don't get sidetracked, filter down, cut out the noise, focus on using screeners and other tools where you can really get down to the nitty-gritty of what's moving in the market, where the capital returns are, and from there being able to not get too greedy, lock in profits, and wait for any potential other moves or those initial signs of trend weakness. So far, we're not seeing it. So far, the market's excited, and we may be at the beginning of a new short-term trend here in the markets that we should definitely be keeping our eye on. Thanks so much, guys, for tuning in as always. It was great to do this video today. I hope you guys enjoyed it. Consider dropping a like, and I'll see you guys in the next update on Monday next week. Take care, everyone.